April was another mixed bag of equity investment returns. The FTSE 100 again was really strong on the back of some strong economic news as well, with growth being up 0.8% for the first quarter. So the FTSE 100, the top 100 companies in the UK, rose by 3.1% in the month. Very strong performance. Not so good in the US, with the S&P 500 being only up 0.7%. But elsewhere in the world, in Japan, for example, it was much weaker, with a -3% return, and in China, -2%. So again, another mixed bag of equity market returns. Bonds were a bit stronger, and the pound has shown increased strength against all major currencies for another month. What I'd like to talk about today is the Indian elections. So these elections, at a cost of $5 billion US, really huge cost, in fact almost the same cost as that of the US election, when, as you will know, parties spend incredible amounts on advertising. So the Indian election, lasting 5 weeks, it's still not over. We'll get the results later in May. It's a 5-week-long election, 1 million polling stations to allow 814 million voters to turn out and elect their leader. Really fantastic exercise for the Indians to undertake, but the logistics of it are absolutely astonishing. No one has to go further than 2 kilometres to reach their polling booth, and they're expecting a record turnout. I'd also like to then focus on frontier markets. You'll know from the seminar back in December that we have a position in frontier markets. We like its low correlation and its diversification benefits. Well, frontier markets will be undergoing a big change at the end of this month, at the end of May. The MSCI is moving Qatar and the UAE up to emerging markets, and this will mean that countries such as Kuwait and Nigeria will form a larger part of frontier markets. So funds that track those markets, both emerging markets and frontier markets, will see some significant changes by the start of June. Now, we get exposure in a different way, not via an index tracker. We use a fund that can take exposure to non-index positions, so we don't expect any immediate significant changes, but there will be changes, and we're monitoring this very closely and looking at whether it's time to reconsider more emerging market exposure.